Good evening once again.
Living, sir.
Welcome to today's lesson. So yesterday, we spoke about capital reduction and the maximum loss and liquidation. So we went through the structure of maximum loss, and I did explain what they are. So today we are taking a full question, likely examination question. Then we will all go through it together. Then we listen to what they want you to do. Now, when in examination, when question is given, there is one thing you will do.
Thank you.
First, go to the requirement and read the requirement before you come and read the question, right?
Okay.
So the requirement says that advise the preference and ordinary shareholders of their position in case of liquidation.
Sure.
You understand the first, and so that means you need to prepare what liquidation, right?
Yes.
Now, propose a scheme of capital reduction that will be acceptable by all the stakeholders and prepare a statement of financial position as at 1st June 2013 after reorganizing scheme has been effected. 3. Describe the legal process required for implementing a scheme of capital reduction. You see, this is a
Sure.
full question. Now, having had what they want you to do, let us go through the question what they want you to do. So, Ed Limited is a company that carried a business as a distributor of music CDs. As a result of stiff competition, coupled with poor management, the company has posted losses consistently for the past few years. The company has reconstituted its management team, which has put in place a new marketing strategy of door-to-door sales, taking CDs to customers in their homes. The new management believes that company will earn annual profit before interest and tax of 2.500 million for the next 5 years. Corporate tax is assumed to be at the rate of 25%. The new management team is proposing a scheme of reorganization to reposition the company and make it a viable going concern. The company's statement of financial position as at 30th June 2013 was afforded. You see, have you seen this preamble? Have you seen?
Yes, sir.
They want to give you an indication of fair idea that there's a possibility of this company can what?
Surviving.
Can survive. You understand? But they are able to even propose to you unexpected what? Inflows of what profit. You understand? That's what tell you they want the company to what survive. Right? Put that one at the back of your mind. Now you
Thank
come
you.
to the statement of financial position, you will see all of them there. You have property, investment, goodwill, intangible assets. You have current assets. You have equity. You also have what non-current asset and so on and so forth. Then you come to the additional information. You come to additional information now. In the additional information, they say that it is ascertained that as at 1st June, the land and building has a fair value of 2,500 million, but could be realized on that date for 1,600. Take note of all these things. The
Yes.
fair value in use of the elements or the equipment and motor vehicle are 750 million and 800 million respectively. Equipment and motor vehicle have realizable value of 600 million and 700 million respectively. Although fixtures and furniture have been recognized at its fair value in the statement of financial position, their for sale value is estimated at what? At 500 million. Investment property of the company has a fair value of 2,650 million, but for sales value is what? 2,300 million. Goodwill is considered valueless, and 20% of what trade receivables are irrecoverable. Inventory can only be realized for 380 million. The recoverable amount of intangible asset is what? Assessed at 200 million. Liquidation expenses are expected to be 40 million, while reorganization expense will be 30 million. Preference dividends are 3 years in arrears. Seventh, the reconstituted management team desire that the limited should maintain cash current ratio of 2.5 is to 1 after the scheme of reorganization. Underline the point 7. The ordinary shareholders will be willing to introduce any additional capital necessary to achieve the desired working capital. That is it. Now the requirement, as we've already known here. So here, the requirement is say advise the preference shareholders whether they should. So advise the preference ordinary shareholders of their position in the case of a liquidation. Please, if you have questions, you can draw my attention. You will mute yourself, then you talk. Now, 3, propose a scheme. So here, you are going to advise them. So before you advise them, what they mean here is that before you give an advice, the liquidation and the reorganization, you understand? Before you advise them, you have to compare both liquidation and reorganization. Which one is more favorable? The one which is favorable, you advise for them to choose. You understand? So you do both of them before you can give any advice. B, propose a scheme of capital reduction that will be acceptable by By the shareholders. So that is where the meat is. He say propose a scheme of capital reduction. You understand? So the scheme of capital reduction, what they mean is that you remember what we did. We did the maximum loss. Don't forget. Have you seen that maximum loss? When you look at the nature of this very question, it is better for you to adopt the maximum loss. That's type 2 method to for the reorganization scheme, to prepare the reorganization scheme. You understand? Because here you can clearly see that they didn't give you anything with regards to share capital. You understand? So if maybe they said you should prepare capital reduction and ledgers, then you adapt the first one that we did under Brotherman. But this one, the question was saying prepare capital reduction. And the capital reduction, the nature of the maximum loss techniques is akin to capital reduction, right? Because that one too is the same as you compare the carrying amount of the asset and the fair value of the asset, right? Because when you look at the capital reduction and the maximum loss, the same. When there is increase in the asset, it go to the credit side of the capital reduction account. But if you are doing maximum loss, you are using maximum loss techniques, it will give you maybe you open the bracket as a gain in the fair value of the asset. Okay, but because the question is specific that do capital reduction and then the proposed scheme, whether they should accept or they should reject, it's better for you to use maximum loss techniques, or which is type 2 to determine to determine for a decision to be made in this instance. Then the last one says that describe the legal process required for implementing a scheme of capital reduction. You remember this one, describe the legal process required for implementing the scheme of capital reduction. Remember when we started this capital reduction, I took you through the formalities. Before a capital reduction scheme is accepted, there's going to be a formalities before that is accepted. You remember?
Yes, sir, I understand, sir.
Okay, all right. So that is a
Yeah, tell
question.
them to give consent. Court must
Absolutely.
come in.
Yeah, thank you very much. You remember them. All right. So that is it about this, right? Okay. So let us switch. And now, before we start the solution, I want to draw your attention to something. Please, are you with me? Yesterday,
Yes,
I
sir.
made mention of that, but let me reiterate it. When we are doing liquidation, follow me here. Under liquidation, the proceeds, before you get the proceed, it may be given to you in the question. If it is not given to you in the question, what did I say you do?
We do the non-current assets
and
plus the
the
current
current
asset.
asset. Good, very good. So let me take this example. Like you have this your balance sheet, or let me say statement of financial position. Your statement of financial position at the end. So you have maybe your non-current asset. Maybe you have plant. You have building. This one is what, 15. Okay. Current asset. You have your inventory. You have your what? Your receivables. Okay, good. You have this. Maybe let me add bank, right? Good. You have this. Now, then you will see it what in the additional information. You what? The assets revaluation. So you have what? You have first one is what, plant. Plant is revalued at 25. You have what? Inventory 13. You have what? Your receivables is 8. Now you are given this. Please, have you seen it? So they want you to find the proceed for the liquidation. They didn't give you the proceed for the liquidation in the question, so you have to come and then look for it. Are you with me? So when you are coming
Yes,
to look
sir.
for it, you realize that you have what? Some of the items in of financial position and some of the items in what, in additional information. When you are confronted with this situation, when you are confronted with this situation, please ignore everything in the balance sheet or of financial position. Then you choose this. Do you understand?
Yes.
Ignore everything. So you rather add these up to form your what? Your proceeds.
Okay.
You understand?
Yes, sir.
It is only when you are not giving revaluation of these assets that you will consider what is what in the what in the state of financial position. Do you understand? Now,
Yes, sir.
if maybe in a state of financial position you have goodwill of maybe 5, right? Maybe here they will say goodwill is maybe nil, or they will not bring it cry at all. They may even state it in one of the additional information that goodwill is what is written off and blah blah blah. What
Exactly.
matters is that in a revaluation of these assets, when we are looking for the proceeds, pick the one in the additional information, add them up to form your proceeds if it is not given in the question. Are you with me? Now, if it's not given in the question, they give you additional information and they have your revaluation, you add them. Are you with me? That will form your what?
Yes,
Your
sir.
process. Now, assuming you have a question, they didn't give you any valuation of any of the assets. There's no asset valuation. Then you can only consider the items in the what, in the statement of financial position. Are you with me?
Okay. Yes, sir.
You only consider the items in the statement of financial if there's no additional information regard to these asset valuations. Are you with me?
Sure. Yes, sir.
Now, when you are choosing the items in the what, the financial position for your proceeds, you only consider this.
Okay.
You ignore goodwill.
Sure.
Are you with me?
Yes, sir.
Thank you very much. All right, so let's go to the question. Question itself. So, what is the name of the company?
Adding.
Good. The name of the company is Ayade. So, all right. So, how do we go about it? So, you pick Ayade. The name of the company is what? Ayade.
Adding.
All right, Ayade Unlimited. So here, the question says find the what? Find the liquidation advisor and advise the.
Yeah. Is that first one is telling you
Mhm.
Advise the preference and
preference
other
shareholders
shareholders.
of their position in case of liquidation. So first,
Yes,
you come and work on what? On liquidation. Are you with me?
okay.
So you start with what? Position in case of what? Liquidation. Then you underline it.
Thank you.
Good. So now, how do we get the proceed from what? From liquidation. So you start it.
Correct.
Proceed from liquidation. All right. So in a question, they didn't give us what? Proceed, right? Right.
Yes, we are not giving profit,
So if
so we
they are
have
not
to.
giving pro, then we have to go and sell the what? Identify all the assets
Yeah.
and then sell, right? Okay. Now go to the question. When you go through the question, go to the additional information, right? Because we in a
Yes, sir.
statement of financial position, we have all the asset and their amount there. Let us look into the what? Into the additional information if there is any valuation of these asset there. Or maybe the question said something about these asset there. Are you with me? Okay.
Sure.
Now, when you look at non-current asset, the first item you see there is what? PPE, property,
E.
plant, and equipment. Have you seen it? And it is how much?
Sure. Property, plant, and equipment. Sir, in the financial statement, it's
Yes, yes.
460.
Good. 4,600, right?
Yeah, but this thing is in millions, so
Yeah, no
the
problem.
sign up there.
4.6 million. All right. Now,
Yes, sir.
come here, come down where you will see that they've broken it down in additional information I or additional information 1. Have you seen it?
Yes, we have land and building,
You see,
furnitures and fitting,
they've
equipment.
they have disaggregated them so that you will see individual item price. Do you understand?
Okay.
Or book value.
Yes, sir.
So when you add them, have you seen that you get 4.6 million?
4600.
As in the what? In the balance sheet. You take note of that. Okay.
Sure.
Now let us see if there is valuation of these assets or how do we get our proceeds from what? From these assets. Now, let us read the second paragraph of point 1. It says that it is ascertained that as at 1st July 2013, the land and building has a fair value of what?
2.5.
2.5. Please, have you seen it?
Yes, sir.
You say land and building has what? Fair value of what? 2.5. Read on. But who be realized on that date for what? 1.6 million.
0.6.
Are you with me?
Yes, sir.
Good. Now let me shift and show you something here. So have you seen what they try to do here? The asset in question is what?
4600.
No. The
Then
asset in
water
question is what? Land.
and building.
Now this land and building, the book value of land and building is how much?
Land and building. Book
The book value
value.
is how much?
No,
Three.
sir, in the financial statement,
Yeah.
we have property, plant, and equipment. That
Yeah.
has been broken into.
That has been broken into what do you call it? That has been broken down in the
Yes.
point 1. So land and
Yes.
buildings,
And
how much is it?
2,200,000.
Yeah,
2.2.
2,200 like this, right? And
Yes, sir.
in
Yes,
addition,
sir.
they said that this carrying amount or book value, or you can call it carrying amount, right, is 2,200. And they said that there's a fair value. The asset
Which is
has what?
2.5.
Good. The asset is what? It's fairly valued at what? 2,000, 2.5. But they said that
Mm-hmm.
even upon this, we can what? We can actually sell the asset. You understand? That's what we call. Have you seen it? That's what they said.
Yeah,
That's what they said.
realized.
It can be realized. You understand? At the date is how
Yeah,
much? 1,000. So
1.6.
so that is possibly you can say fair value. Fair value. Okay, fair value of what of 2,000, and it can be realized. It means it can what? It can be sold at what 1,600.
600.
Now listen, you are confronted with this very situation. What do you do? What do
Yes,
you
sir.
do? So among these ones, which one will you pick as your what? As your proceeds?
Uh, if I am the one doing it, I'll take the fair value
Why?
because that is the value the assets need to be sold.
No, that is the value, the assets, that is the market value of the asset.
Asset.
But you can
Okay.
it can be sold at 1,600. That's the whole thing.
That is what you can realize if you
As
want
you
to
can
sell it now.
realize, it's 1,600. Though it can be what? It is fair valued compared to other, taking consideration of all manner of factors in the market. It can be what?
Market.
The value of the asset is what? 2,500. But it can be sold at what? 1,600. Do you understand?
Yes, sir.
You see, if you are familiar with IAS 36, you realize that even fair value is not complete. There's what you call less cost to sell. You
Sure.
understand? So at the end of the day, you have the fair value of the asset, but when you are going to sell it, there are other incidental costs you can incur,
Because that you make.
and you can also reduce the fair value. When you realize it can be less than the fair value. Are you with me?
It's true.
Take
It's
note
true,
of
sir.
that. So when you are doing that, you take note of that. So here, land and building, what will be the proceeds? You come here, land and building. So which figure are you considering?
And then we have to use a realizable value.
Which one? How much?
1,600.
Thank you very much. So here what will be in millions, right? This is what you
Yes, sir.
will realize. Good. Now let's move to the next asset. The next asset is what?
The next asset we have there is investment property.
No. It has been broken
Okay,
down.
okay.
Go to the
Yeah,
point one. Yes. Furniture and
fittings.
fitting. Good. So you have furniture and fittings. Okay. Good. Now let us go into furniture and fittings and then do analysis on furniture and fittings. All right. Go there. Furniture and fittings. Now, the carrying
We
amount
have
is how much?
the book value
Aha.
is 700.
Good. It's 700. Now, let us go into the question. What are they saying about it? So, when you go into the question, they said that, watch here, look for furniture and fitting. Watch here, come to last sentence in that paragraph. Although, Mhm,
furniture and fittings have been recognized at its fair value
mhm,
in the statement of financial position,
mhm,
their for sale value
mhm.
is estimated to 500 million.
Are you with me? So here,
Yes, sir.
they want to tell you that the current amount of what or the furniture and fitting is this, but we have something called for sale,
So
which is how much? 500.
500.
When we say forced sale, what we mean is that when we say forced sale, when you are doing IFRS 13, for
Fair
sale
value.
for fair value for sale is not acceptable in what in the measurement of what assets, fair value measurement of
Asset.
assets. You understand?
Okay.
Ha.
Okay.
But yes, because we they want the value or the price of the asset should be what should be arm length transaction without any what
In
somebody
a
being under
duress.
duress to sell the asset. You
Yes.
understand in that
I
manner,
get
and you
it.
understand. But in this instance, we are talking about liquidation. You understand? We are talking about
Yes, sir.
liquidation because this asset is going to be what is going to be sold. You understand? So because we are not going to record this asset back into the books. That's the idea. So if you are recording it into the book, IFRS 13 does not support for sale, which will be recorded in the book. Are you with me? Because if you have
Good.
asset, the value of the asset, you are going to buy that. Because the moment you acquire an asset, it will sit in your book. The asset value should be arm's length transaction. So it shouldn't be any forced purchase of this asset and sit in your book in that manner. No. So if in that is the case, then the IFRS 13 doesn't support for sale. But this
I
is the situation where we are talking about what? Liquidation. And liquidation, when we say for sale, it means that though the value of the asset is 700, but we are forced to sell it at 500. Because if you don't sell it, who will buy? You understand? And
Well, because
remember,
the business itself is going bust.
absolutely bad. And you see, you should also understand that when an asset is under administration, how much is being sold is always less than the market value. You know that.
Sure, sure.
Aha. So that brings the what we call the forced sale. So between this one, which one are you going to pick?
The first sale is what we are going to
Thank you
receive.
very much. So you pick that one, then you bring it here, 500. Good. The next item is what?
Equipment, sir.
Equipment. Good. Equipment. What are they? What is? So let us analyze equipment as well in this instance. So when we pick
The book
equipment,
value.
uh-huh.
The book value is 800.
Okay, so the carrying amount is 800. Now, let's go into the question. What did they say about equipment? So the equipment,
Okay.
look at the second sentence in the first second paragraph.
Okay. Let's
After
go
the
there.
after the land and
The
building, the
the
second.
values in
Mhm.
use of equipment and motor vehicle are 750 million and 800 million respectively.
So what does it, when the moment you see they arrange it that way, what does it mean? It means
And it means equipment is having one value, motor vehicle is
thank
having
you
one
very
value.
much. Mhm.
And when you read further,
So please so let's see.
equipment,
Let's see. So the the equipment value is which one? I want to record.
the first one,
Thank you very much.
750.
So 750. Let me put it there. So that one is what? You say value in
Now the
use.
value in use,
Good. Value in use. It's how much? 750. Okay.
50.
Now let's go.
And we go on. It says that equipment and motor vehicle have realizable value of 600 and 700 respectively.
Okay. So which one belongs to equipment and which one belongs to motor?
600 belongs to
Thank you very much. So
equipment,
that's what we call the
700
realizable value.
to motor.
So realizable is how much? 600.
Y-
Have you seen it?
Yes, sir. Yes,
Good.
sir.
Good. So this one too, when you are, if you are also familiar with IAS 36 impairment, you will understand where
Yes.
this one is coming from, right? You understand where it is because of this value in use. You understand? So when the asset continue being used, this is how much what you will realize, right? And then fair value less cost to sell or the realizable value of the asset is also 600. And this is your carrying amount. Here we are not doing IAS 36 impairment, right? Good. So what are we doing? We are doing what? Liquidation of an asset. So among these, which one will you pick?
Then we pick 600 because that is how much we will
We can
get.
sell the asset. So the
Because we are
equipment,
liquidating, so we can still
absolutely.
maintain the
So this
value
is
in
how much?
use.
600. Thank you very
600.
much. So the next item is what?
Motor vehicle.
Moto. Good. So moto, let us also do moto analysis. You have moto. What is the current amount of what of moto?
900, sir.
Okay. So the current amount of moto is 900. Now let's go into the question. That one too, they say value in use is how much?
And that we are giving one, that is the one 800
Yes,
first.
so value in use of moto is 800. It is there.
Yeah.
And then the realizable value is how much?
The realizable value is, that's the last one. This
Okay,
one
so
is,
you check it there.
that
And
one is 700.
that one is what? 700 respectively. Okay. So that one is 700. We can realize it as 700. Okay. So if you are in that position, which one will you pick?
Let me take 700.
You will pick what? 700. Okay. So you are getting the clue small, small. So motor
Yes.
vehicle will also come 700. All right. What next?
Then we go to the financial statement.
That's fine.
We are
So what are
picking
the
investment property.
then let's go to investment property.
Property.
So here, so it means we are done with PPE, right?
Yes.
We are done with PPE. So we are done with PPE. So we are now coming to investment property. Investment property falls under which standard?
Investment property is 38.
No, it's IAS 40.
40. Oh, 40.
Okay.
40.
Now let's go. Now, what are they saying about investment property in the question?
In the
We
question, let's take
we
that is
have
two.
so here when we look at investment property has what?
We
So the
say
investment
investment
property.
property company has a fair value of
So let's start.
2 million.
So you have investment property like this,
Yes.
and the current amount of investment property is how much? Check for me.
225.
2,500. Now let's go into the
Yes.
question. What are they saying about it? Let's go, or let us go there all together. Come to
Two. No,
point
two.
two. Mhm,
Yes. No, two is telling me that investment property of the company has a fair value
mhm.
of 2650.
Okay, so the fair value is what? 2,650.
But for sale value is
For
two
sale,
three 2300.
like this. So once you have the clue, which one will you choose? I've already
The
explained
lower
this. The
2300.
2300. So that is what you are going to consider in this instance. All right. So that's 2,300. Let's go. Which item is next?
The next item is goodwill.
Goodwill. Goodwill, we can't sell. I've already told you. Remember what I told you here. Watch here. When I was explaining here. When you are selling assets for proceeds, what did I say here? Don't forget. What did I say here? When I was explaining this, there's a goodwill, there are property assets and all that. What did I say here?
Since we are liquidating, goodwill has no value.
Uh-huh. So what did I say?
So we are not going to consider
So
the
you will
5.
ignore it. That's all.
Yes.
So the same thing applies to what we are doing here. Goodwill is what is ignored. Then you move towards because goodwill is there. It is what? It is 100% impaired.
Sure.
You understand? Goodwill is
Yes.
100% impaired, right? Okay. So when asset is going into liquidation, goodwill is 100% impaired. Now let's move. The next one is what?
Intangible.
Intangible asset. Let us go and do analysis.
Intangible. We
Okay,
have
what did I say? What did they say? The current amount is how much in the book?
500.
500. Okay, so let's go into the book. What did they say about intangible assets?
Okay. Let's go to intangible asset.
Mhm.
Point 5. The recoverable amount of intangible asset is assessed at 200 million.
Good. So here, all they want to tell you is that you have what recoverable amount, which is how much 200. Now, when we say recoverable amount, that's how much we can recover when it should be sold. When we are doing IAS 36, comparing favor less cost to sell and value in use, the one with the highest of value is what we call recoverable amount. So
Amount.
I'm not going to go into standard now. So recoverable amount is 200. So which one are you going to choose between current amount
That
and
is what you are going to receive. So
thank you very
200.
much. Thank you very much. So you come here, you pick what 200. which is what? Intangible asset.
Next one is inventory.
Okay, so inventory. Okay, so let us go and then do analysis of what? Of inventory. Okay, so the inventory, what are they saying about inventory?
Book value. Let's take book value first.
Okay, so
700.
carried amount
Invent
is what? 700.
7.
Good.
Inventory 4.
It's
Number 4.
700. Go to 4. What did they say?
4 is telling me inventory can only be realized for 380 million.
Good. So that is what you can see. You see over there. So inventory. So realizable is how much? 380
3
million, right? So that is what you realize. So you pick what? 380. You bring it here. Okay. Which
Next
item
one,
again?
trade receivable.
So receivable. Okay. So let us analyze receivables. What are they saying?
We have the book value.
Hmm?
The book value is 300.
Mm-hmm. What did they say again?
Then we were told that
So that is
um
under item number 3. Check.
yes, goodwill is considered valueless,
Valueless. I told you already.
and 20% of trade receivables are irrecoverable.
Okay, so what does this mean?
It means 20% of that 300 can
Thank
never
you
be
very
received.
much. So you have
So
here.
it's a bad debt.
So you have here. So this one is what? Irrecoverable or the bad debt as you are leading. Bad debt is what? How much? It says what?
The 20%,
20%. So what you have to do, so 300 multiplied by what? 20% will give you the bad debt. What do you have?
236, so 60.
It will give you how much?
60, sir.
So 60. So this 60 is bad. You will remove it from 300. That gives for 240. Okay. So this is what will appear in your what in your book here. For what?
The
What you
next one, we are done with the assets.
uh
We are done with the
we
assets.
are done. So we do so that is all. Do you
Yes.
understand? That is all. Don't go to other ones, please. You do it up to current assets.
The
Then
asset.
you
Okay.
end it. Good. Then you add it up. So this becomes our proceeds.
600 plus 700 plus 2300 plus 200 plus 380 plus 240. 6520.
6520. Okay. So
Yes,
this
sir.
becomes your what? Your total what proceeds. All right. 620. So what next? So the next is what? Distribution of this what
Yes.
proceeds. Distribute as follows. Now, so when you are doing distribution, which one did I say comes first and which comes second, third, and so on?
Distribution. We have secured creditors,
Good. So
fixed
first, you consider what? Secured
creditor,
creditors,
fixed
right?
charge.
So they are what? They are fixed people. Now, go into the question. If you can identify those people who are fixed, go to
Okay.
go to current liabilities.
Non-current. Okay. 15% debenture.
Have you seen
Secured
it?
on property. Yes.
Have you seen it?
Yes.
Good. So when you are confronted something like this, what do you do? And the total is how much?
That is 450, 400, 4,500.
Have you seen it? So that means property and plant, the total amount of what property and plant,
It's
the
4,000.
debentures
The
is
one,
what?
the book value
Okay.
is 4,600.
Good. So when you are confronted, like, what do you do? So that's where I want you to pay attention when it comes to the distribution in
Issues.
this instance.
Thank you.
Are you with me? Okay. So
Yes,
here,
sir.
what you do is that the fixed charge is tied to. Are you with me? The fixed charge is tied to a PPE,
Yes.
property, plant, and equipment. So if so, watch here. Property, plant, and equipment are what and which one and which one and which one? We have land and building. It's part of PPE. You know that.
Furnitures and
So
fittings.
so have patience. So let us do it, and you know what I'm doing. So you have what? Land and building.
Okay.
When we sold, how much did we realize?
When we saw land and building,
Well, how much did we realize? Watch it here. It is up here. Watch it.
was I'm coming.
No, what the
Yes.
board? The
160.
160,
The
1,600.
board.
Yes. When we sold it, how much did we realize?
Yes.
1,600, right? And which
Six.
asset is also part
Yes.
of which asset is also
Yes.
part of PPE?
Furnitures and fittings.
Furnitures and fittings. Uh-huh. When we sold it, how much did we realize?
500, sir.
500. You'll bring it. Which asset is part of what? Uh, I mean, secure loan. Which asset is part of what?
Equipment.
PPE.
Equipment is part.
Equipment is also part of our PPE. When we sold it, how much did we realize?
When we sold equipment, we have 600.
600. Which asset again?
Yes.
Fall under
We
PPE.
have motor vehicle.
Moto. When we sold it, how much did we realize? Watch it here.
700, sir.
700. It is there. Good. 700. You see. So these are what? The PPE. And it is secured. So when we sold this PPE, which is secured, how much did we realize in all? How much did we get?
Okay. Let me go down. 1600 plus 500 plus 600 plus 700. 3400.
Thank you very much. So we had 3,400. You
Yes.
understand? But remember, the secure loan was how much? 4,500. How do you
Yes.
or you've not seen it?
Is there non-current liability?
Please, are you with me?
Yes, sir.
Follow me keenly. So you see,
Kinley.
I'm telling you, you see, when you look at the debenture, look at the debenture. In the debenture, they said that the secure loan is how much? Where is it?
45.
4,500. But when we sold the asset, we were able to realize how much?
3400.
3,400. Clearly, we couldn't realize all the money after selling the PP. Out of out of out of 4,500, the secure loan. Secured creditors. And it's a debenture, right?
Yes.
15% debenture, which is what? Secured loan. It was secured. And it is what? Against what? The PPE.
Yes.
And then the credit is how much? 4,500. Is that not the case?
Yes.
So after we sold the PPE to defray the debenture, 50% debenture during the liquidation, we realized how much?
3400.
3,400. So when you less it, how much balance left to be paid?
1100.
1,100. You understand? So this is the
Yes.
balance to be paid later. You understand? You remember yesterday I said something like that. Okay. So
Yes,
here
boss.
now, this is what we have. So take note of 1,100. We will fix it. It will fall under the. It will fall under the unsecured loan. Remember, I told you that, right? Okay. So we
Yes.
are done with secure loan. Let's go to the next one. Is what?
The next one is liquidation
Thank you very
expense
much. Liquidation expenses.
or cost.
How much is the liquidation expenses?
Sir,
Go.
please.
Okay.
So here
Mm-hmm.
we are going to use the 3,400.
Yes, that's what we are going to
Thank
use.
you.
So that's
Thank
what we
you.
are going to now. We are going to pay first. We will pay the 3,400 to the secured creditors.
Thank you.
You understand? Later,
Thank you.
when there's enough money, then the 1,100 left will be what will also be paid. You understand?
Good.
So that's how we do
Good.
it. Now let's look at what liquidation expenses. So where do we find the liquidation expenses?
We read liquidation
Come to
expenses.
point six.
Six.
Mhm.
Liquidation expenses are expected to be 40 million.
Okay. So liquidation
Whilst
expense is 40 million,
this,
and while this one is what? So that is how much? 40, right? Liquidation expense is what? 40. Good. Now let's move. The next one is what?
the next one is secured creditors,
Mm-hmm.
floating.
So this one is what? Floating. So the floating is what? Under who?
They're
We are who?
floating.
The float. So let's go into the question to see if you
No,
have
sir,
floating. Yeah.
preferential creditors, we don't have them.
No,
That
we
is
don't
why I
have.
moved to.
No, we don't
Uh-huh.
have them. Those people are the salary and then the SNIT and all that. We don't have.
Yeah, that is why I moved to
Yes,
that side.
I get that. But you have to keep
Thank
it
you.
in mind. So, secured creditor floating are which people?
Secure creditors floating the bank charges on maybe our business assets
So,
that
go into the balance sheet to find the floating charge.
bank overdraft.
Thank you very much. Bank overdraft. And it is how much, please?
Bank overdraft is 500.
So, that's bank overdraft. 500. What again?
Then we come to the next one will be unsecured
That
creditors.
is good. So when you are finished with these secured creditors, unsecured credit and liquidation expenses, then you add it up.
Okay.
You understand? When you add it up, then you what how much do you have? You do it that so
Okay.
that you will not exceed, you will not consume more than
The
what you
value,
have. So what do you have?
okay. This is 500. I'm coming, sir. 400 plus 40 plus 500. I had 3,940.
So 3,940. Then you will less it from what? From the total proceeds. So now you are going to pay this money out of the proceeds. You understand? Aha. You pay it out of the proceeds. How much do we have left?
The process is 652. Okay.
Mhm.
6520. 2580.
All right. So you have 2,580, right?
Yes, sir.
Good. So this is what you have left. So the balance you have left. Then you continue from there. What follows?
Then from there, we'll move on to what we said it is unsecured
Thank you very
creditors.
much. Unsecured creditors. And I told you that unsecured creditor consists of what? Trade creditors, general, you
General
understand?
creditors, supplies,
So
and
there you pick them one by one. And remember, that is where I told you that the unsecured creditors, you consider the balance that you didn't pay from fixed charge. You remember?
yes,
I was saying that this one, this money.
the 11100.
Yes, this money. And so you will bring your what? Your 15% debenture, which was what? Fixed on what? On an asset or PP.
1100.
1100. And which go to liability. Current liability. What can you see over there?
Current liability. We have trade
We
payable,
have trade payables. So let's
accrued
count.
expense.
We have payables. How much is payables?
Payables is 1200.
1200. And what again? Which item is there?
We have accrued expenses.
Accrued expenses. How much is that?
That will give me 400.
400. What again?
Finish. We've
Finish.
dealt with.
It's finished, right?
Yes, sir.
Good. Add it up. When you add, what do you have?
Okay, sir. Coming, I have 1100 plus 1200 plus 400. 200, 2700.
2,700.
Yes.
Now, have you seen this balance? Watch it very carefully. What I'm doing here. 2,700. We have to pay 2,700. How much balance do we have?
2580.
So, can we pay the other
No,
person?
we have to prorata it.
You understand? We can't pay. So, as you are saying, you have to what? We have to do prorating, or we have to prorata.
There's a difference of 120.
You understand? So we can't pay it. So all you have to do is that you come here. So you have to prorata. So how do you prorata? You will just pick this one. You multiply. You multiply. Let me do it this way. How do we share? How do we share the proceeds?
That
You
we
pick
have
this
to
one.
sum
You
this one.
divide it by this one. Then you multiply by what? By the money.
Yes,
You
times one,
understand?
two.
So you pick this. You divide it by this. Then multiply by. So you pick this one.
2007. So
So the remaining
2007.
200 divided by 2,700 times the money, which is how much? 2,580. So you do same to this times what? 2,580. 400 divided by 2,700 times 2,580. First one, how much is it?
First one, 1100 times 2580 divided by 2700. I have 1051.
Okay, then 51. The
51.
second one is how much?
The other one is 1147.
1147. Mm-hmm.
Yes,
Anything? Okay, good.
it's okay.
Okay,
38 382.
okay, right. So when you sum it up, it should be able to give you what? Here should be able to give you zero because we will less it also. You understand? So we
Yes,
are
sir.
taking these monies from there. So at the end of the day, here will be what? Will be what? Will be zero. Okay, so we are done what? Sharing the money. So here, when you are done, there you will come to liquidation. Okay, so the losses and the liquidation, what do you find here? Which people didn't get the money? The next people who are supposed to get the money.
Preferential and ordinary.
Thank you very much. So the first person who lost is what? Preference shareholders. And the second person is what? Ordinary shareholders. Right? Okay. So how much is preference shareholders?
Preference
So
shareholders.
let's go into the question and find the preference
Yeah,
shareholder. Go to equity. Preference shareholders.
that is 15,500.
1,500. They will not get anything. They couldn't benefit anything. So they will lose. So this one is 1,500. And then a percentage of their loss. Percentage of their loss. This one will lose 100%. Come to shareholder. Other shareholders is how much?
Other shareholders is 8
8,000.
3.
So that one too will lose 100% of their money. Now you come to the people. Have you seen that? Have you seen these people? The unsecured loan people. Have you seen it?
Yeah, yes.
You realize that we couldn't pay all the outstanders. You should know that.
Yeah, we are left with 120.
No, we couldn't pay all the money. Their money we couldn't
Sure,
pay. We are supposed to
sure.
pay 1,100. We ended up paying 1,050. We are supposed to pay 1,200. We ended up paying 1,147. Have you seen
Sure.
that? So that one too, there are losses. So here you come to what? 15% debenture. That one too, we are supposed to pay 1,100, but we ended up paying how much? 1,000 and what? 51. So how much did he lose?
49, sir.
49, like this.
Yes, sir.
So they lost 49. So in percentage wise, how much have they lost? So you pick the 49 divided by 11. How much do you have?
Okay, 49, 1100. 4.45%.
4 point
45%.
to 4.5%. Okay.
Yeah,
You do the next one is for payable.
yeah. Well,
We were supposed to pay 1,200, but we ended up paying how much? What's here?
we paid 114.
1,147. Okay. 1,147. How much left here?
53, sir.
53. So you want to know percentage of what loss, you do the same thing. So you have what? 53 over what? Over 1,200. So what do you have?
4.42%.
Okay, so you have what? Accrued expenses. We were supposed to pay
Yeah,
them how much? There's how much? 400.
yes.
So I paid them 382. So how much
So we
is
have
left? How much are they
18
losing? So they lost 18 over 400.
divided
How much are they losing?
4.5%, sir.
Okay. So that is how the question the A is talking about. Have you seen it? So here,
Yes.
if you want to say something here, all you have to say is that you say that
Okay.
when the company goes into liquidation, the above amounts are what shareholders and what stakeholders will lose, right? So there you say preference shareholders and what ordinary shareholders will lose what? Will lose their entire what? Investment. Including what? Dividend. Full stop. That's all. So you've answered the A as they requested. Any question?
No, sir.
Aha. So that is what they ask they want you to do. Okay. So let's go to the next one. B. Let's say you should what a proposed scheme. This one is what A. Okay, so you can't do B. So B, I want to do the
Okay.
maximum loss and capital reduction account for you to see that they are the same, similar. You understand?
Okay.
But so let us start with what the maximum loss. So here, the B, they say you should what? You should do the proposed scheme. So the proposed scheme, how do you do it? So amount of what? So you say what? The maximum loss. Or you can say capital reduction. Then you underline it. Okay, when you underline it, as I said, you what? You will have your what? Your carrying amount here. And you will have your what? Your fair value here. And you have your gain
or loss.
or loss. Yeah. Okay, so when you are done, you what? You underline it beautifully. Okay. When you okay, so when you have it like that, then you go into the question. You start picking the items one by one. Start with PPE.
Property, plant, and equipment.
Yes.
460.
No, the individual items. Be careful.
The individual.
Mhm.
Okay. Land and building.
Land and building. Okay. So what is the carrying amount of what land and building in the question?
The book value is
The
two
book
two.
value 2,200.
Yes, sir.
Good.
And then we were told there
Mhm.
is a fair value.
Absolutely. You see, they were told that there's a fair value of how much?
The fair value is coming up.
Go to additional information. It is
Land and
there.
building is 2,500.
Thank you very much. 2,500. Now, when you less, the difference is how much?
300.
300. Is it positive or negative?
This one will be positive.
Good. Then the next item.
The next item is furnitures and fittings.
Okay. Furnitures and fitting. Hmm.
700.
700. Good. And what is the fair value? Go there
We don't
again.
have fair value. We have for sale.
Yes, that's not fair value. Read it. Read it again. You say that although furnitures and fittings have been what recognized at its fair value in the statement of financial position.
Position.
Do you understand? So they want to tell
Yeah.
you that the fair value of what or furnitures and fittings is the same as the carrying amount.
Okay. Okay.
So here we got 0.
700.
Okay. Then the next one is what?
Next one is equipment.
Equipment. Okay. Equipment, what do you have? Carrying amount is how
810.
much? 800. Okay.
Yes,
So
sir.
what is the fair value?
We have value in use and realizable value.
Good. So which one will you pick?
Then the realize we
So
use
equipment. Watch here. Watch here. Let me take you up. All right. So let's come to equipment. Carrying amount is 800. Value in use is what? 750. And realizable value is 600. So if you
yeah.
want to know the fair value of this equipment, you will pick the one with what? You will compare. This one is like when you are doing the what here? When you are doing the capital reduction or you are doing the maximum loss, when you are comparing the value in use and net realizable value of the asset, you pick the one with the highest of the value. It's like you are doing IAS 36. You
Okay.
understand? You will pick the one with the highest value. You understand? Because here equipment, the current amount is 800, but fair value between value in use and net realizable, which one is of a highest of a value? That's what you will pick.
750.
Thank you very much. 750.
So
This one,
negative
good. So you put it in bracket. How much?
50.
50. The next one,
Vehicle.
vehicle.
Motor vehicle.
Okay, motor. What is the current amount of motor?
900, sir.
Okay, 900. And then what is the fair value of motor?
Motor. Yes.
Okay,
There too,
when
don't
we
have,
look at
we have,
motor,
we have, we
okay,
have business valuation, book value.
uh-huh,
We have value in use and realizable value.
good,
And per your submission, you are saying that the value in use and realizable value, we pick the highest.
absolutely,
So the highest is 800.
800. Okay, good. Then we'll pick 800 here. Is it gain or loss?
Negative, negative 100, sir.
100. Good. Then let's move.
We are done with them. We move to the next items.
Okay,
Investment property.
investment. What is the carrying amount?
Investment property per our tabulation, the current amount is 2,500.
Good. What is the fair value?
Fair value
Let's go to
is
it.
2,650.
Okay, let me go. Okay, good, good, good. Well, you compare the fair value and false sale. So the fair value 2,650 indeed. Okay, yeah, correct. So 2,650. Okay. Is it plus or minus?
It is positive.
How much?
150.
150. Okay. Then which item again?
Goodwill
Good.
will not, or
It will come. Goodwill will come here, but it will be written off.
why? Why are we bringing the goodwill
When
there?
we are doing capital reduction, don't you take goodwill to capital reduction account?
Okay. We
I'm saying
send it there.
maximum loss is the same like capital reduction. You
Sure.
understand? But because capital reduction, because you are asked to prepare ledgers and prepare actual capital reduction account, then you see them debit and credit. But when I'm doing maximum loss, it's the same principle. You understand? Aha.
Yes, sir.
Good. So let's go. So yeah, you have what goodwill. Goodwill, I told you it has no value.
Yes.
You understand? So it will be written off straight away here.
So
Good.
400 for.
So here it must go to the debit side of capital reduction. So you go to the debit side of capital reduction, what does it mean?
When we go to the debit side of capital reduction,
Yes, so it
the
will be
debit side is losses.
in bracket. You
Yes.
understand? So how much?
The 400.
400. That's all. And what again?
Next one is intangibles.
Intangibles. What did they say about intangible? What's the current amount of
Int-
intangible?
we have the current amount is 500.
500. Okay. And then what did they say
The fair,
about intangible? The fair value of intangible is how much?
we don't have the fair, but we have recoverable amount and book value.
Okay. So where is intangible? Intangible. Recoverable amount and then okay, so it's only two. So which one will you bring here?
Then the recoverable amount will stand.
Then does it. So is it negative or positive?
Let me put it there first. 200.
So
It's negative.
negative 300. Okay, what again?
Inventory.
Inventory. So what are they saying about inventory?
Inventory, we're told the book value is 700.
Book value is 700. And what did we say? What did they say happened to it?
Inventory has a realizable amount
Hmm? How much?
of 380.
Good, because they said that it is impaired by 20%. You remember
Sure, in the
in the
footnote.
footnote. Okay. So you can realize 200, 380.
Yes, sir.
Is it negative or positive?
Let's put it is negative.
Negative. So you less it give you
Coming
320. 320. Okay.
three twenty.
The next one is how much?
The next one is trade receivable.
Receivable.
Yes.
The
Book value is
value.
300.
Thank you very much. And they said it is also impaired by 20%. I remember. Here we are.
Yeah,
Where is it? They said it is impaired. Yeah, receivable
sure,
as in bad debt.
sure.
So we have value of what? You understand? It was impaired by 60 million.
60.
So you have what balance of 240. Okay. So 240. Is it negative or positive?
This one give you negative
So how much?
60.
60. And what again?
Then we are done with the assets. I
Okay.
don't know if
Yeah, we are done with that. So then what again?
we have equity.
Remember, it is like you are doing capital reduction. Oh. Don't forget our
Okay.
capital reduction principle. So we'll go through it. What again?
Mm, what am I?
Don't forget
Come-
about reorganization uh, expenses.
Reorganization expenses before the preferential and then the
Reorganization expenses. Have you
capital
forgotten?
surplus and other things. We
Have
can.
you forgotten? It doesn't matter which comes first. The most important you identify the item. So reorganization expenses how much?
Reorganization expenses. Footnote. Reorganization expenses. 30 million.
30 million. Let me check. Organization
Check.
expenses is 30 million. Yes, it's 30. Okay. So that one is 30. So nothing counts here. Is it negative or positive?
It will behave like the goodwill, so it will be in bracket.
Okay. And what again? Because when you do capital reduction account, you see it will also go to. All right. So let's go. What again?
So,
Go to your equity. I'm saying that when we are doing maximum loss, like you are doing capital reduction. So all the
I
items
mean,
that
your equity, ordinary shares.
no, ordinary share will not come here because they are going to suffer for the losses, so they don't appear here.
Okay, 12% cumulative preference share.
So that one too will not happen because they will also suffer for the losses. They are the stakeholders. Have you forgotten?
Sure.
You understand? They are the stakeholders. The same reason why liabilities will also not come here because they are the what? The stakeholders. Have you seen the
Then,
difference between the capital reduction when you are doing capital reduction and the maximum loss? You understand? Some of the items that will go to because even capital when I do capital reduction, liabilities are not affected in most cases, especially your trade payables. You understand?
yeah, both.
So the next item that will suffer is what?
Income surplus,
Income
because
surplus.
preferential this will not
Uh-huh.
count.
Now, income surplus, I told you that one too what?
It will behave like
It will be written off. How much is it?
income surplus is 7100.
Okay, so that is the amount is 7,100. All right. So when you are done, what again? I think they are that is all. But watch here. There is some item here. They said that the last paragraph, the seven, I say you should underline it.
Preferential something took 5 years or so.
Preference preference shares are not paid.
Yeah,
You
for three
understand? For
years.
3 years. So it will affect the reorganization losses.
Preferential dividend.
It will increase the losses to be borne by what? Do you understand? Okay.
Yes, sir.
So that one, that's preference dividend, 12%.
Yes.
Now, how do we calculate this 12% preference dividend? Remember, they are, it says 3 years, right? So
Yes,
preference
in
dividend is how
arrears.
much? 12%. What is the value of what preference dividend is how much?
Preference
Dividends how much?
1,500.
1,500 times 3. You say 3 years. So when you multiply, what do you have?
Coming up. 1,500 times 3 times 20%. 900.
12% times 5,500 times 3 years. You say 3 years. Have you forgotten?
Yes, I'm coming up. 1,500 times 3 times
No, 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 no. You multiply 12% by 1,500 before you multiply by 3.
1,500 times 12%. Hey, it's big,
Hmm.
times 12% times 3. 540.
So that one too is increase the what? The liability of what of the company. So that is all about this. When you are done, then you close it.
Okay.
You understand? You also
Yeah.
put at the back of your mind what I have shown you here. Put at the back of your mind that this one is margin loss is quite different from our capital reduction. You see here, when it comes to capital reduction, you do ledgers. You understand? You do, or you see, they didn't tell you to do ledgers. You understand? So this one is type 2 is quite different from when you are doing capital reduction, where you will have to post debit and credit, and then you have to reduce your capital, adjust your and so forth. You see, this one is not like that. When you look at the nature of
Sure.
this question, it's not like that. You see, so how I've arranged it, we call it maximum loss or capital reduction. So at the end of the day, when you sum this all up, you'll get loss here, and the stakeholders will bear the loss. That is it. You understand? So when you add
Yes.
it up, what do you have?
So I'm doing it.
All right. So the losses. So as after we added the losses, how much did we got? Did we get? We got 8,450. So this 8,450 is what we call the maximum loss or loss. So this loss will be shared among the shareholders and stakeholders. So that's what we call sharing of losses. Then you underline the sharing of the losses. You understand? So yesterday, what did I say? I said that you can take these losses and give it to only one shareholder. You understand?
Yeah.
But you have to be very mindful. Whilst you are doing that, you should what? You should compare the losses when you want to reorganize to liquidation. Look at the losses for the liquidation. Liquidation preference shares is what? 1,500. Ordinary share is how much? 8,000. Yeah, another. So when you are coming to share the losses here too, you should be mindful too with the losses with regards to the liquidation, right? So here you will come, you will say what the original, can say what the
Capital.
original capital. Then here is the what is the losses, and here is the what is the new capital or liability. Liability. Okay, then you underline that one too. And so here, when you are coming to share, what do you do? So first, you will first consider the one who will suffer the first person who will suffer should be ordinary shareholders. Now, ordinary shareholder, the original capital is how much? 800,000. Or is how much? 8,000, right? Okay, it's 8,000. Now, you ask
Yeah.
yourself, should I give all this loss to ordinary shareholders? No. But when we give all of them, the total loss is 8,450. They cannot bear all. You understand? Uh-huh.
Sure.
So, how much can you give it to ordinary shareholders? You understand?
Let's give.
Somebody can decide to give this loss, share the loss between ordinary shareholders and preference shareholders, and it's fine. And there's nothing wrong with that. But
Thank
remember,
you.
when you do that, check if and remember when we are sharing the losses here, make sure that your losses here should be less than the liquidation losses. You understand?
Okay.
So
Yeah.
that you can justify why they should reorganize rather than to liquidate. You understand? So here,
Yeah.
how do you want to share the losses?
I want to give ordinary shareholders 7,000.
Okay, so have patience. Let me also give you some clue here. Now, what is the total loss? The total loss would have been how much? Let me. The total loss will have been how much?
8450.
So 8450. Then you less
Yeah.
the dividend that you want with removed, which is 540. What do you have? When you less it, what do you have? I will show you something. What do you have?
8450
Mm-hmm.
minus 540.
Mm-hmm.
7910.
7910. So that will be your 7910. You see, if you are doing the maximum loss and you don't bring the preferred dividend loss here, you will still be fine. You understand? You will still be fine because what? When we are coming to share the losses here, I will say we are coming to share the loss against the shareholders and the preferred shareholders. Now, if we keep the 8,400 and share it among ordinary shareholders and preference shareholders, we are not being fair to the preference shareholders, because the preference shareholders, they are the beneficiary of what? The dividend. You understand? They are the
Yes,
beneficiary
sir.
of what? Of the dividend, right? So when we are coming to share the losses, then remember, we want to reorganize. You understand? So if you want to
Sure.
reorganize, their dividend shouldn't be a loss on them. So you remove it, then you share the losses among all of them. You
Okay.
understand? So that in the later, after you reorganize, you have to pay it. Then you know that preference shares are what the accumulative share that will be paid when the company starts making profits. You understand? We don't pay preference dividend when they are making losses. We accumulate it for future. So since they are reorganizing, you have to what? You don't have to make it a loss and share it among them. Remove it and put it some aside. You understand? But for the purpose of the total losses, you will bring it here. But when I come to share the losses, remove it. Then you share the rest of the what of the money to the stakeholders. Do you understand what I'm saying?
Sure.
Good. Now, how do we share? So you have this 7,910 to share. So how do you want to share it? But when we are sharing the loss, make sure that the loss should be less than the what? Should be less than the liquidation losses. So how do you do it?
I'm now having 7910
Mhm.
as my basis.
Yes. So how do
Yeah.
you share the losses? And remember, the losses you can share it among ordinary shareholders and preference shareholders. If you like, you can bring the current liabilities as well, payables. You can share some of the losses to them. You have payables. You have 15% debentures. You remember them,
Sure.
all of them, and then you also have all of them are liabilities. You also have accrued expenses. You can share these losses. Somebody can share these losses among them bit by bit. Somebody can share it among maybe two. Somebody can also share it among maybe this one. So let me remove the venture holders here. Well, the venture holders are long-term liabilities. So let me bring the accrued expenses here. They are current liabilities. Okay. So somebody can share it among the ordinary shareholders and preference shareholders and payables alone. Someone can share it among the three. Somebody can share among preference shareholders and then ordinary shareholders. It all depends on what? On the liquidation losses percentages. So yeah, let's go fast. So how do you want to share it?
I said, let's give ordinary shareholders 700.
7,000.
7,000. Yes.
Okay.
That is what I am
Okay.
thinking.
Now you have 910. How do you share? So here, this one too, the original is 1,500. Okay. So
Yeah.
the 900, 910, how do you share it?
We can give it to him.
To this one, eh?
Yes. And then
Okay.
we go.
And then the 10 should go where?
Then we can give it to the payables.
The payable, what is the original value for payable?
Yeah.
1,200. So you give him
1,000.
this one. So when you add it, it will sum up as so now this becomes your what? So these are your losses. So here you have your new capital left for this one is what 1,000. Is that not the case? And then this one is how much? 900 minus 1,500 will give you how much?
600. 600.
600. And this one will be what? 1,000.
1,190.
Okay. Like this, right? Hey, are you sure? Once I check it.
But this is 1,002. I'm coming over. Minus 10. 1,001. 1,190. 1,190.
Like this. Okay, so this becomes
Yeah.
your new. So this becomes so that's all. You've shared it. You understand? This one you didn't give it. This one I created and it's not fast. So you've shared it. So that's how you want to share it. Please, are you with me?
Sure. Sure.
So you are done with sharing. That's all. So that is what the second leg of the question talked about. Do you understand? So when you are done, then you prepare what balance sheet for that. Now, before you prepare the balance sheet, look at this. Have you seen the 7? What did they say? They said that the reconstitution management team desired that Airden Limited should maintain a current ratio of 2.5
Point.
is to 1. You understand? So they want to do what we call injection of what new funds or cash into the what? Into the company.
Business.
You understand? Are you with me?
Sure.
So when
Sure.
they are doing that, we call it this how. So when they are giving you a ratio to inject new capital or cash, we call it what? Working capital.
Okay.
We call it working capital. So how do we determine the working capital or injection of new money into the company? So they've given you what? The current ratio.
Working capital.
So they've given you a current ratio of what? How much?
2.
So the current ratio is what? 2.5 is to what? Is to 1. Right? Okay. So how do we go about it? And you know what is the formula for current ratio?
Current ratio is current ratio over current liability.
Current what? Current asset
Uh-huh.
over what? Over
Current.
current liability. Okay. So this is how you go about it. First, line up all your current liability. So line up all your current liability. So go into the question. What are the current? You know that you have your what? Your payables.
Payables. Payables. Payables. Payables is 1,200. 600.
No, no, no. Here, you look at it from here. What is your current liability, payables, after you've done the share, you've shared the losses? That's what I'm saying.
Uh,
Payables, watch
so
it. After the
one one
losses,
one
it's not 1,200 anymore. You understand?
one one.
So that's where you pick it from. Your payables, you gather. So it's what 1,190. The next
Yeah,
item is what?
accrued expenses.
Accrue expenses. After
Zero.
the sharing of what of the losses, is how much is left?
Accrued expenses, we don't have
No, we
anything there.
didn't share any loss against accrued expenses.
So then we have the 400.
Then you will pick it from what? From the balance sheet straight away. Which is what?
So
400.
400. Thank you for the correction.
You understand the whole thing, please.
Yes.
Then the
Yes.
next item is what?
Bank overdraft.
Bank overdraft. Thank you. That one too, you will pick it from what? From the balance sheet. How
Okay.
much is it?
500.
500. Then you add it up. You add them
Okay.
up. So when you add them, what do you have?
2090.
Good. So you'll have 2090 being your total current liability. So when you are done with that total current liability, then you come and do what we call desired current ratio. That's what they want. So watch it, read it here. They said what the ordinary shareholder would be willing to introduce any additional capital to achieve the desired working capital. You understand? So the desired working capital is this. So your desired working capital, how much is your what? How much is your liability?
Current liability. 2090.
2090. You pick 2090, then you multiply by what? By the ratio given. You understand? Then you multiply by the ratio. So you will have what? 2090 times the ratio is what? 0.1. When you multiply, what do you have? 2.5, sorry.
Yes. 2.5. 5225.
52.25 like this. Please like
Yes.
this. So this is what we
Yeah.
call desired what? Working capital. So when after you've gotten your desired working capital, now you come and do your what? Your current what? Then you will do what we call less current asset. So the current asset, check what are the current assets? Mention the
Current assets. We have inventory.
inventory. What is the value of inventory?
700.
Value of inventory.
Yes. Are we going to? No.
No, that one too. The affected inventory is not the one in the balance sheet. To go to the
38.
go to the where is it? Come here. Where is it? Here. The fair value. You understand? Inventory is
Yeah.
380.
80.
Hmm. So 380. And which item again?
We have trade receivable.
Receivable. That one to the fair value is how much? Maximum loss. Watch here. Watch it. The fair value. I'm showing it to you.
Trade receivable.
Oh, can't you see?
That is, we are having 240.
Yes. So please, you see, when you are doing this thing, at all time, put at the back of your mind the affected values, not the original value. Unless the original value was not affected during when we were doing the maximum loss and sharing of the losses. If it is
Okay.
affected, that is what you are going to use. Now, when you add, what do you have?
620, sir.
So 620. Then you less 620 from what? From 5,225. What do you have?
4605.
4605. This is what we call working capital.
Okay.
That's all.
Okay.
This is what we call working capital. So when you are
Thank
done here, this is how your this thing will going to look. You will pick your equity. When you pick your equity like this, your share capital is going to look like this. Your share capital is how is your share capital going to look like? Go here.
I should
Like
go
this in
to
thousand. Watch it here.
uh,
Your ordinary share. That's your new capital. Your new capital is 1,000. Okay.
1000. Yeah.
It's 1,000.
Equity. I mean,
You understand? That's how your then there's what? There is cash that is coming in, which is working capital, which is what? 4605. Then you come and add it 4605. When you add it, what do you have? They've injected new money into the company. So when you add it, what do you have?
505.
Come again.
5605.
5605. So this becomes your what? Your working capital. So this is what you are going to take to the balance sheet. So here, what is the name of the company? So
The
so
Eddie.
so statement of what? Financial position as at what? 31st what? June or July?
We can make it 1st July.
No, like it should no check
They
the
ended
no
on
no check
30th June. 30th June. They ended on 30th June.
30th June 2023 like this.
That's
Good. Now then you start with your what? Your non-current asset. So your non-current asset, one, you have what? Please go into the start from what? You are going to use the maximum loss to determine your new balance sheet. Oh. So they are the
thank you.
custom so and you are using the fair value items. Okay. So
Thank you.
the first one is what? Land and building.
Yes.
What is the fair value of land and building?
2500.
2,500. Which item follows next?
The next one is F and F, furnitures and fittings.
Furnitures and fitting.
And furnitures and fitting is giving me 700.
Okay. It's 700. Which item follows?
The next item is equipment.
Equipment. What? How much?
Equipment is giving me 750.
750. The next one is motor.
Motor
Motor is how much?
vehicle.
Motor is how much?
800, sir.
800. Okay. So motor is 800. Eh?
Yes,
750.
sir.
Okay. That's fine. Now we are done with this one. Gold will not come. And so on.
We
So
have
we will have
investment there.
investment. So investment property is how much?
Investment is 2650.
2650. Good. So we are done with what? With current, non-current assets. Now let's go to current asset. So your current asset, you have your what? Your inventory. How much is inventory?
380.
Inventory is giving you 380.
Then
Good.
we
Receivable.
have trade receivable.
Mm-hmm.
That one, the fair values I have 240
Trade receivable is
for
240.
trade receivables.
Yeah, 240. You are right.
Because we have negative
Yeah, yeah,
60.
yeah,
I
yeah.
think we are done.
Hey, remember there's what? There's a working capital, which is cash, which was brought in.
Okay, okay.
You understand?
So working capital.
So the cash, how much was brought in?
The cash is 4605.
4605. Good. We are done with what current assets. So let's go to equity and liability.
Yeah.
When we come to equity and liability, we have equity. So under the equity, we have for share capital. Share capital, remember, this is share capital.
We have 1000.
1,000 plus the
The
working capital.
six four
You understand? Here we are. You understand? So you see, in accounting, whenever cash comes, there's a corresponding entry to what? To equity. Do you understand? Okay.
Okay.
So here, what do you have? When you add the
Five
two, ah,
5605.
good. So 5605. Okay. And what again?
And the next one is 12% cumulative share.
5605. Okay, the next one is what?
The cumulative preference share.
Okay, preference shares. 15% preference share.
No,
How
it's
much is it?
12.
Okay, 12. So to get the preference share, go up there. After sharing it, have you seen the preference shares? How much is the preference shares now?
Currently, new capital
Yes,
600.
600. So that comes here. That is all about the equity, right? Then you come
Yes,
to
sir.
liabilities. So this one too, you add it. Then you come to liabilities. When you come to liabilities, you have current and non-current liabilities, right? Okay.
Yeah.
So we have what? Non-current liability. Okay, another non-current liability. What and what do we have?
We have 15% debenture.
Good. How much? 15.
Yes.
15% debenture. Uh-huh.
Yes, sir.
How
Secured
much?
on property, plant, and
How
equipment.
much is it?
15% debenture.
It was not affected when we are doing the reorganization. It wasn't affected.
Okay, yes.
Yes, it wasn't affected in any way. So you pick the full value. How much?
4500.
4,500. And what again?
Finish. They will go to
Good.
current.
There you go to current. Okay. So the current liabilities. What do we have? I know we have payable.
Trade payables.
Payable, what do we have? How much?
Trade payable was affected.
It
So
was affected. So you come here.
111190.
Yes, 1190. 1190. And then accrued expenses. Accrued expenses was also not affected.
400.
How much?
It was not
Yes, it was not affected.
400. Yeah, 400.
400. And what again?
Then we have bank overdraft.
Okay, bank overdraft. Okay, how much?
500.
Is it affected?
No.
Check if it was not affected here. Okay, it was also not affected. How much?
500, sir.
500. That's all. So work on it and let's see if it will balance.
7400.
7400. Okay, so let's go to current asset.
5225.
5225. Okay, so when you add the two, what do you have?
That's 7400. Total 12625.
12625.
5.
Now let's go down here.
And
Add
let's go
this.
down.
Mm,
We are here.
add the
Five
capital.
zero
No,
five
add the capital first. 560.
5
Mhm,
plus 600.
mhm.
606205. 6205.
Okay, so let's come to, we already know that this. So add the long and short term liabilities and let's see.
The current liability will be 2090 plus 4500 plus 620.
Oh, what are you doing? Give me this one alone.
Which
Give me the
one?
liabilities alone figure here.
That will give me 2090.
2090.
Yes, sir.
Which one is 2090? Only the current liabilities.
Current liability, yes.
Okay, fine. Then when you are done, then you add all of them together. The current,
Yes.
the capital, and all the capital, add the long-term liability, then you add the short-term liabilities.
There's a difference of 100.
No, give me the values.
It will give me 12,795.
It will give you
The total,
12,795. So let's see. The up there is how much? This one give you 12,625.
yes.
Okay, then you let us look for the difference. Where is the difference? Where did we
On
lose?
top, let me check the difference. 12.
Check the add these ones up again. Add the asset again. So the reason why the account did not balance, one, we omitted intangible assets, and two, we miss adjustment. That's reorganization expenses from there. So here, when you look at our system of financial position here, you realize that we didn't break intangible assets. But when you look at the table, you realize that there is intangibles there, and the intangible is how much 200. We didn't bring it to the system of financial position. That is where the problem is. So we miss it. That caused the account not to balance. So you have to bring what the intangible assets here. So intangible, which is how much 200. The fair value is 200. Now, and we add this to this. How much do we have here? 7,600. Added to this one, that gives us what 7,600. Good. Now the next item is what we failed to do an adjustment to what to the cash. Now, when a new cash is introduced into the business, when there's a new cash or investment into the business, two things happens. You debit cash, then you credit your what? Your share capital to balance the account. Now, after this entry is done, and there's any subsequent expenditure on current or for operational purposes, the accounting entry is going to be your debit your what? Your profit and loss account, and your credit your what? You credit your cash. This is what we fail to adjust here. When we look at this very question, there is a working capital, which is a new cash introduced into the business, which is 4,546,005. This money. Okay, so when this money was introduced into the business, what happens? We debit what? Cash of 4,605. Then we credit your what? Your share capital. 4,605. Good. Now, after this entry is done, and there is what? There is any expenses to be done, especially reorganization expenses. You contracted an administrator to, facilitate the reorganization of the business. You have to pay them. You have to pay the what? The administrator. So when you are paying the administrator, what happens? You what? It's an expense. So you debit your profit and loss account. Then you credit your cash. with what? With such amount. Now, when we look in when we look at this question, how much are we paying for reorganization expenses? We are paying how much? 30. All right, so when we look at this question, as I'm saying, you see that we spent 30 million on what? On reorganization. So you debit P&L, then you credit what? Credit your cash in order to balance your account. So that is what we say. So here, what we would have done here after we had our working capital, which is how much? Just a cash. So which is how much? 405, right? Without what? Less reorganization, reorganization expenses, which is for 30. So when you less it, how much is it? 4575. So this would have gone in as what? As a cash in a what? In the system of financial position. However, what will go to the equity will remain the same. It will only affect the what? The cash. It will only affect the cash, but not the what? Not the it will not the share capital as it's already been carried out. I've already explained that in detail here. After the entry, after debiting cash, you credit your what? Your share capital. Any expenses will be paid through cash, and then the entry will fall between cash and then what? The profit and loss account, right? Because I don't really remember at the end of the day, you cannot, you cannot, at the end of the day, when cash is reduced by 30%, share capital will equally reduce by 30%, by 30. You see here, when cash is reduced by 30 million, working capital will equally be reduced by what? By 30, but through what? Through profit and loss account. Through profit and loss account, because your net profits shall what? Will be reduced by what? It will be reduced by 30. So when your net profit is reduced by 30, it will affect your what? Your retained earnings. Right? So when your retained earnings is reduced, your share capital is also what? Reduced by that. However, that is how the entry is done. You can't go and remove it directly from your share capital. No, it will pass through profit and loss account before it affect the what? Your total share capital. So simply that is how the entry is going to be. So here, this one is corrected. Then let's come here. So if that one is corrected, then our working capital, our cash here will also be corrected as such. So here we will show 4575. I know added, what do we have? 51, 55. So I know add this, what do you have? 7,000. So that gives you 12, 7, 9, 5. That's it. So that is it. So let us see what it is balanced. So 12,007. And let's look at also. All right, so that one is 12,795. So it is well balanced. Okay, so that is it. 12,795. This one is 12,795. All right, let's proceed to the last one. So the last question is talking about. So the last question was talking about describe the legal process required for implementing scheme of what? Capital reduction. So this simply means that they are looking for the process or the formalities before the implementation of what? Capital reduction. So one, the company shall convey other person, so they will convey extraordinary meeting with the shareholders and discuss the way forward to the outcome of the meeting shall be taken to the High Court for approval. Uh, the meeting outcome shall be communicated to the other stakeholders. So these are the three formalities, or these are the three processes that they go through before it is approved for the company to go on with the capital reduction. So now finally, this is what you advise. Finally, advice. So this is what you do. You will bring your liquidation, and you bring about your reorganization. Advice will you give to the shareholders, and then so here you bring your ordinary shareholders, preference shareholders. Well, that's what the company is talking about. When you look at the question, it says what? It says advise the preference ordinary shareholder of the position in the case of liquidation. Right? We've already talked about. So here, your final decision on this matter here is that if the company goes on liquidation, they are lost. They will lose how much? Look at the liquidation. When it comes
Yes.
to liquidation, when if it is liquidation, the company, the ordinary shareholders are going to lose 100%, 100%,
Right.
right? Okay. So you come here. So they are going to lose 500,000, which is what 100%, and shareholders 8,000, which is what 100%. Now, when we come to reconstruction or reorganization, watch here, ordinary shareholder, preference shareholders. If we don't know how much they are losing, pick ordinary shareholders. Now, sure, you have what? 7,000 over 8,000. How much is that? You come to preference shareholders, it's 9,000 over 900 over 1,500 times 100 times 100. How much are they losing?
87.5% for the first one.
87%. 85, right?
Yes, sir.
Okay, good. So now, when you come here, how much they are also less? So this one is what? 87.5%, and this one is what? 60%. So in conclusion, the shareholders shall be what? Shall be better off. The shareholders shall be better off with what? Reorganization. Because they are lost. They are lost when reorganized.
When
It's favorable.
reorganize.
It's favorable
Okay.
than what? Than liquidation. That's all.